Hi guys. Oh, we're live. I didn't realize it had started. Hi guys. Welcome to another episode of Global Money News Review. And basically on these sessions we talk about the global economy, what's happening in the global economy and how it affects your pocket. And I'd like to say welcome to everyone. If you're just joining us for the first time, please connect with us on our social media handles. This happens every week, every Saturday, GMT plus 1, 9 a.m. And my name is Ola if you don't know me. Um, so let's get started. Basically, what we do, we walk through global, African, and Nigerian news and talk about how it affects your pocket and what you should be doing going forward in light of this. Why is this important? Because the economy matters as much as we can plan in our individual spaces and make positions or take positions. The fact is that the economy can just throw you off. And the external environment can just throw you off. So we have to be mindful of that and then factor that into our decision making. So this is us providing with that added knowledge of what's happening, added information about what's happening, and knowledge on what to do about it. So let's get right into it. On the US of the global space, right? US 2-year yield is lowest since is at its lowest since 2022 as CPI data is awaited. What's CPI data? Inflation information. So basically what they're saying here is that the yield on the 2-year US bond is at its lowest in the past 2 years. Now, why is 2022 significant? Because it was at that season where the Feds were raising rates consistently. And they are saying that the yields on the bonds are at its lowest since that time. What does that mean? The ECB has cut rates. That's the European Central Bank. The Canadian Central Bank cut rates last week. So not this week that we just went past. The week before, the Bank of Canada cut rates. And then this week that we just ended, the ECB, that's European Central Bank cut rates. It's There's just this trend where it almost feels like the interest rate hikes have reached a head and it's getting to the time where they start reversing these rates. Now, what does that mean for you? If you are in the developed south, the developed north, you know that interest rate that the Fed or the central bank is raising or bringing down has a direct impact on your credit card rates, has a direct impact on your mortgage, on every form of loan that you are taking, right? So obviously, when they say they are bringing down rates, it means that it's cheaper to borrow. When it becomes cheaper to borrow, then it means that people can start buying more assets, can start doing more. Consumption will increase, demand will increase, and the economy will begin to jump up again. Now, if we are anticipating what when they say that the US yield is lowest, it means that the traders are anticipating that rate cuts, are anticipating that drop in rates, and they are beginning to position themselves for it. Now, as a solo runner, like an individual, trying to be good in life. Hi, Business Online. Thanks for joining in. As an individual trying to be great in life, what should you be doing? From an investor perspective, if assets are going to be cheaper, if you already bought, if you were able to buy or before the rate cut, then you will see that your valuations will increase. You can be banking some profit. Now, if you have been on a high interest loan of any form, then get ready to start repricing or refinancing because rates are going to start coming down. Now, if you were not in any of that and you're just about to start, I dare say that once the rates are cut, especially when the Fed actually cut rates, that's the US Fed, the fact is that the US is the country of the world. So if the Fed's cut rate is going to spill across the world, it's going to affect everything across the world, affect asset prices, affect liquidity, everything, such that if you are able to position ahead of it, if you have liquidity to buy assets, then this might just be the time. And if you are not, and once you hear that the rates have been cut, right? Go and borrow and buy those assets, right? It will just be starting. Now, the interesting thing here is what I want to point out as economic cycles. A lot of times when those rates are being raised, when things are being tightened, it just feels like it's never going to end. But I've seen these economic cycles twice now. This is my third economic cycle while working. usually spans 10 years. It's almost consistent, right? And it's very important as a lay person who has gone through the pressure of the past few years, to understand that it's always a cycle. You have to pull back and understand where we are in the cycle and know the things that you should or should not be doing at this time, so that the next cycle, which will always come, doesn't take you by surprise and you are well positioned for it. If you are in the Money Week Club, who is like the company that sponsors, right? In connection lost. If you have questions, drop in the chat about this. We can discuss and unpack more depending on what your questions are. But if you like want real-time answers, join the Money with Club. The website is there. And while you are thinking about it, we have a free newsletter. Subscribe to it and you will not regret it. Now, the next news out of the global space. So there was a debate in the past week. The US, like I said, US is the country of the world. So the debate between the two aspirants for the most powerful presidency in the world currently, and there was a lot of back and forth. And we're not going into politics. Ours is money, ours is finance, right? But it was interesting to note. I mean, and we've talked about it. Like it's good for you to listen to these things every week. I listen to our sessions every week. Why? Because it builds up over time. So we've talked about the fact that when you are looking at who is going to who you want to win an election, you should be looking into their policies and their ideas, what they think, what they see they're going to do when they win. Now, if President Trump is pledging 100% tariffs for countries that shun the dollar, what does that mean? There was news earlier where the current president of the United States has put 100% tariff on goods coming out of China, right? And basically, what were they trying to do? They're trying to preserve their economic security by saying that these people are producing things so cheap that our local producers cannot compete. So we're going to put 100% tariff on some specific goods, right? Now, we've also heard of things about BRICS and the fact that some countries are trying to shun the dollar, right? Now, what he's saying is that if you shun the dollar and you want to export anything into America, you're going to get 100% tariffs. Now, how does that play out? So what he's trying to do is to get the to support local manufacturers. So if you are an American looking for who to vote, like, okay, does this favor you or does it not? Right. But on the other hand, there's also going to be economic trade relations, foreign relations that have to go into making that decision and implementing it. But it's just pointing things out. The most important thing here is to have the information. When you read the news, you know what you are seeing, so you can relate it with your pockets. Why? Because it does affect your pocket. If you are planning, if you are from a nation that is talking about BRICS, brings all that, and you are planning to export to America as a business idea, then you need to um, think about it if it's a strategy for the next 2 years, especially when the elections are in November. Yes, so we will know by December, January who the next president is. So if the math is not mathing, you know ahead of time if you should just abort mission or not. That is why these things are important. A lot of times people don't consider what's happening on the outside in making their decisions, and they just fall like headlong into problems they could have avoided. Now, next is information around Africa. Kenya revised their diaspora bond plans as the budget gap widens. Like we've talked a lot about Kenya and what's happening in Kenya, especially with respect to their economy, right? So there was protest. No, there was increase in tax. Then there was a protest. There was a cancellation of those plans, and then there was a reintroduction of those plans. And then now there's some current protest because of a planned sale of the airport or some airports, right? Um, but then they are coming back to say that, okay, this diaspora bond that we have started talking about earlier in the year, we're going to revisit it. And for me, I think it is Nigeria giving them ginger. Why? Because Nigeria, we'll talk about that. Nigeria successfully raised 900 million dollars from bond issuance, domestic dollar bond issuance, right? Was oversubscribed by almost 200%. Now, what are they saying? They're saying that they want their own nationals wherever you are in the world to support the country. And we've talked about this extensively. It's like a double-edged thing. What do I mean by double-edged? One of the things that when you invest in a euro bond, it's open to everyone. There's more liquidity. When I say there's more liquidity, there are more people buying and selling. So if you want to exit, there's always someone somewhere, anywhere in the world that can be buying that bond. But if you restrict it to your locals, who most times, if you do, they are most times most likely going to be retail people with their 10K, 20K gathering together to make those millions, right? It sounds nice on one side, but from a liquidity perspective, it's a risk. That's one. And then from the fact that the economy is going through a stressful period, that is why they're exploring these things. It's not products that had always been in existence, right? They are trying to explore new ideas, and it is fantastic for Africans to fund Africa. It is that for me is like the highest tick in this whole journey, in this whole decision. But from an economic default, risk management perspective, it's almost like now we so if katakata busts, we would have to solve it internally, and so that also increases the risk for especially for people who are working hard abroad and want to wire in that USD to support the economy. But as a whole, in the long term, as long as the government is very prudent in the deployment of the dollar that they receive, and they are very they are able to account for it properly, then in the end, it could turn out well for them. So I wish them all the best in that. Then Ghana, Ghana is still on a journey, and this is why it is like the worst thing ever to default. Fun fact about a default is that if a country defaults on one bond, if they have 20 bonds and they default on one bond, you take it that they have defaulted on everything, because you cannot pick and choose which one you are going to pay back. If you owe me from last year, you can't say that you have money to pay these guys back. And so it just carries everything and puts in the same buckets, because you cannot pay these other people when you've not paid me. Do you get? So it becomes a mess. So when you say the 13 billion bond, the actual bond that they defaulted on was, I think, either a 1 billion or a 500 million bond, right? But it just creates that ripple effect. And such, they have to negotiate everything, even the naira, the CD debt holders. That means the whole debt holders in the local currency will be affected, because you can't be paying people when you have not paid me my money from last year. That's how it works. So they're still in the process of restructuring. It's a very long process, and it's something that governments need to avoid. So it is always important. Now, if you are not a Ghana bond investor, right, then this doesn't affect you directly. But why are we highlighting it here? Because when you are considering default, right, you can't consider the probability of default for one asset. You have to consider probability of default for everything at the same time. So even when it comes to diaspora bond, if there's a risk of default on one, then there's a contagion effect on everything. So just know that, and know peace in understanding how these things work. Don't say, oh, they can pay me back in naira. No, it doesn't work that way. There's a contagion effect. You have to restructure everything at the same time, and that's what's happening in Ghana. And then finally, Nigerian news. I've already touched on that. Okay, just to even highlight that, if you're just joining us for the first time, welcome. Please sign up to our free newsletter. It gets you information about the club, about what we're up and about. It just keeps you in the loop, and you have stuff to read, even if you can't attend, join these sessions or watch them later. So Nigeria. Yes, well, it had a successful run at the on the bond side of things, and it's good. It's good. When I say it's good because number one, Nigerians are funding Nigeria, right? Um, Nigerians are funding Nigeria, so that is good. And that is always good. You can never be wrong with doing that. That is always good. But we wait to see in terms of the deployment of the liquidity. We expect a 900 million injection into the reserves is also good. It should keep the exchange rate stable for a bit, and especially since we are expecting the Feds to cut rates, so we might have some respite from an external perspective on the pressure on the currency, because what generally tends to happen is that when the Fed cut rates, at first you might not see the impact globally, but as the rates stay low for a while, you begin to see capital flowing across the world. And at that point, even though Nigeria is high risk, compared to other countries. You would see some liquidity flow into capital investment, debt, all that. That is actually how it happens, such that if this can hold us for a while, we might be able to see some stability, maybe not some appreciation, but at least some stability in the near to medium terminal exchange rates. Might is the key word, but this is the logical outcome of this, right? So yeah, and finally, the FG is a slice of OPay and Pound Pay transactions, right? Um, Basically, what they are saying, they're going to be charging some tariffs. Like, see, let's not. It's like it's called the transaction will now be subject to electronic money transfer levy, right? What are we saying, right? The fact is this: that's what's happening in Kenya. That's actually just that the Ghana economy is already stretched as it is, so it's very tough for them to raise taxes. So maybe that conversation is not as strong there, but it is a conversation. It's a global conversation. You would even like if you hear the debates, if you listen to the debates from around the British elections, there is just a need to raise cash. There is just a need to raise cash, and so if the government hasn't gotten to you, they're coming. They're coming, but basically they're saying they would impose a 50 naira levy on all transactions of 10K and above, right? And so let's see, because Pound Pay, Money Point, and OPay, they've pretty much taken over all the POS transactions, all the businesses, everybody has pretty much moved them, and they're really quite efficient, right? So getting a slice of it, um, should it be, it's a direct tax, right? It's a direct tax, and it's a, it adds up. It actually adds up significantly and all. But let's see how it goes. We almost um I would say you have control over it. You know, these things. Part of the backing for this is that there is an FIRS regulation that sort of empowers them to do this, and they're just implementing it. So yeah, this is just for you to know, as a business owner, because what will probably happen is that with every transfer, you see that 50 naira debit. Now it's a little dicey for people like in the core market who, on the sale of a carton, might just be making 100 naira or 200 naira. So these things begin to add up, and it might actually slow down online transactions, or they will pass it on to the customer. So for every transfer you do, you would what's it called? You would have to add 15 naira on top. That is what will probably happen. But anyways, thank you guys so much. Like I said, this happens every week. Saturday mornings, GMT plus 1, 9 a.m. And we keep you abreast of what's happening around the world. Don't forget to subscribe to our channel and see you